So 2023 got off to a great start for the stock market, especially compared to 2022, but it saw the S&P 500 rise about 8.5%, and we had stocks like Tesla rise already 75% year to date. But with this sudden rise, maybe we should take a second and look into the details to see if this rally can be sustained and if it was warranted. I myself have one reason that I currently cannot overlook why I believe this was an unsustained rally and why we may see a retrace, but let's get into that in this video. Also, very quickly, I was having a look at the analytics of my videos and I saw that 65% of people who watch my content are not subscribed. So if you do enjoy this video and want to help support the channel, I'd really appreciate it if you consider subscribing. Okay, so firstly, let's take a look at the Q4 2022 revenue growth reports that came out for a couple of the big companies. All here, aside from Meta and Apple, saw year-on-year positive growth numbers, although they were in the single digits, aside from Tesla, of course, which seen 37% year-on-year growth. But even that 37% was the slowest since 2020 for Tesla. Microsoft was the slowest since 2017. Amazon, it was the third slowest year-on-year growth since the company started. And Netflix, for example, had their slowest growth in their history. So them year-on-year growth numbers are not too good in the grand scheme of things. While on the surface you see maybe a positive number, you think that mightn't be too bad. But as you can see, in the context of a couple of years, that's not looking too good in terms of a positive outlook for the future. Next up, we have the job market, which especially the technology sector has seen a lot of cuts recently. Pretty much every technology company that I know of has seen some cuts. For example, some of the headline names here were Google, Microsoft and Amazon, which seen a lot of cuts, and generally in the tech sector there was about 70,000 job losses in the last year. So again, this with the year-on-year growth does not look like a strong indicator for positive performance this year, as especially with the jobs reduction, it looks like companies are trying to get ready to weather a bit of a storm, and that may be the recession. But now let's move on to the biggest reason that I think that this stock market rally was unsustained, and that is government or treasury bond rates. For those unfamiliar, this is essentially where people can loan their money to the US government and they, in return, will receive a certain rate, which currently sits at 4.79% as of the start of February. So this type of investing in bonds is generally considered risk-free, especially as they are backed by the governments. So essentially we can look at this as a guaranteed return, otherwise a no-risk investment. Now looking to the likes of the S&P 500, which we'll generally use to talk about the stock market. On average, the S&P 500 returns about 7% per year. But of course, that's an average. For example, last year, this S&P 500 lost 10%. And while it's had a good start to 2023 with that nearly 9% gain, there's no way of saying that it will remain positive throughout the whole year. So for a lot of investors, they may see that 4.79% and say, I'm happy with that return. I'd rather in this current economic market take that return and not take a risk on the stock market just to try to get myself another 3 or 4%, which may or may not happen. So while these interest rates are generally high on bonds, I don't see the stock market sustaining any type of rally. Sure, we can have some big run-ups, but I do not see the fundamentals behind it right now that it will sustain this rally. If bond yields, for example, drop to 1.5 or 2%, for example, there would be a lot more incentive for people to take on a bit of risk and get back into the stocks. And at that point, I think that would be a very good indicator that stocks would be on the rise and could sustain the higher highs. But of course, this is not financial advice. These are only my thoughts. Honestly, it's as good as anyone's guess. We just can't know for certain. But it's good to think about these things, and especially when the market is in the state that it is right now, with it being in extreme greed. You can look up the stock market fear and greed index at any time, and it will give you a general reading of the market. And as the saying goes, be greedy when others are fearful, and fearful when others are greedy, with the latter part of that statement being true right now. So for me, I'm currently thinking about two different approaches. So number one is, and this can be applied to pretty much any time in the market, is to kind of forget about the noise and continually dollar cost average in to your favorite stocks and positions, especially those that you think can weather a recession. And good indicators for that are they have a strong cash flow, they have strong balance sheets, and they also have pricing power in a market. Generally, it's one of the most effective strategies, and if you have an investing horizon of 10 or 20 years, it's probably going to work out the best for you in the future. But if you have a bit more time to be in the stock market and thinking about whether you can make some more money in the short term, for example, over the next year or two, you may want to look at different strategies like taking some profits off when we do have these sustained rallies. And that's essentially what that second half of that saying means, being fearful when others are greedy. It basically means to take a little bit of risk off the table when others are being greedy and thinking that this rally will be sustained, for example. So for me personally, what I'm aiming to do is take a little bit of profits during this recent rally here, not get too greedy, still leaving most of my positions invested, of course, because it's impossible to time the market, and I definitely don't want to miss out on any bigger rallies, but I'll definitely take a little bit off the table due to the thoughts I've basically explained there, that I don't see a big incentive for people to be investing in the stock market right now when there are alternative options with essentially risk-free guaranteed returns. So for me, I still have money on the sidelines waiting to be invested into stocks when I do see red days, and for now I'm going to take a little bit off the table on some stocks that have had a big run up in the last little while here. But yeah, of course, as I said, it's anybody's guess. I'd love to know what your thoughts are on how you think the stock market is going. Will this rally be sustained? Will we see a retracement? Love to know your thoughts in the comment section below. As always, if you enjoyed the video and you could take a second to drop a like on it, would really appreciate it. And as I said, if you have not subscribed yet and you're watching this video, especially if you made it this far, I would really appreciate you subscribing to the channel. Thanks so much for watching, and I'll catch you guys in another video.